Hey, my name is Jason Nicholson and welcome to my YouTube channel. In this video, I want to talk about the possibility of the Federal Reserve or the Bank of England doing an emergency rate cut. If you've been on social media, if you picked up a newspaper or you've watched the news in the last few days, you will see that the markets are in absolute chaos at the moment. It is carnage. They have been dropping at an alarming rate, and it's all down to the tariffs imposed by the USA on the whole world. So in this video, I'm going to talk about the possibility of a rate cut. Even if that doesn't happen, there's some potentially very good news about mortgage rates as well in this video. So do make sure you watch to the end to get all that info. And if you're new around here, do make sure you subscribe to the channel over there and hit that bell notification. We're a smidge away, like so close to 40,000 subscribers now. You can see around this video how close that is. Let's get some more views on this video by smashing like, tickling like, doing something to that like button. That helps with the YouTube algorithm and really helps the channel grow. And share the video. I'm sure you know a friend or family member that's got a mortgage right now and wants to know what's going on. So share it, WhatsApp it, email it, or Facebook it to somebody so they know what's going on as well. Well, crazy week. Like, it has been an absolute crazy week. So last week on April 2nd, Donald Trump had something called Liberation Day in America. And the goal of that was to put tariffs on a lot of countries around the world. We didn't really know what was going to happen leading into it. We knew tariffs were going to be on, but it ended up that every country in the world got tariffs. And they were supposedly based off how much that person has a tariff on them. But it turned out that actually wasn't the case. It was a deficit that needed to be made up. And so the tariffs on some countries are as high as 40%, which is absolutely crazy. The next day, the stock market crashed. The day after that, the stock market crashed again. And today, the stock market has been very volatile. It's down at the moment at the time of recording this, but it has shot up and gone back down at various times throughout the day as well. The reason for it going back up at one point was because the news reported that the tariffs were going to be paused for 90 days. Here's what is the key problem here is it's really, really volatile. We don't know if Donald Trump is using this as a negotiating tactic, which some people believe he is doing to reduce tariffs on America around the world. But the words coming out of their mouth and his administration's mouth is that this is a permanent thing and it is being used to generate income for America so they can reduce tax to its citizens. So it's really unclear what will happen, and that gives a lot of uncertainty, and that's why markets are reacting so badly. Now, why does this impact us? Well, often when you get massive stock market shifts like this, central banks can come in and cut interest rates like they did in the pandemic in order to give some stability and to give the markets a little bit of hope. And hopefully that gets them back on track for growing again. But we've got a problem here. You see, Jerome Powell, who is the head of the Federal Reserve, he was interviewed on Friday, and what he talked about was the fact that these tariffs are going to cause inflation on American consumers, especially if you're importing from China and you buy something for £100 and now it's $100 and now it's got a 40% tax, an extra $40 that is going to be very inflationary on American consumers. You've also got things like cars that start in America, then they move to Mexico, then they move to Canada. The parts are made all over the place. And so these products could have been in and out of the country multiple times, incurring a tariff each time. It's really unclear how that might work as well. And so Jerome Powell is saying inflation is a concern now, and they were not expecting these tariffs. No one was expecting these tariffs to be as high as they actually are. So that's one thing the Federal Reserve has got to keep an eye on. Another thing that they will keep an eye on is jobs, the labour market as they call it. And last week, the American jobs figures were very impressive. 250,000 jobs were added in March. And that was way higher than they were expecting. So now we've got two problems. We've got the labour market is doing really well, so unemployment isn't surging ahead there for now. And you've got inflation worries. So right now, the Federal Reserve kind of has their hands tied, even though we've got this stock market crash happening right now. Now, the Bank of England will probably follow the Fed. So they're probably unlikely to cut rates in an emergency fashion. So what's happened outside of that? Well, the markets have reevaluated how many times do they think rates will be cut this year. And that's increased from 3 times to 5 rate cuts happening now. And the price of the chance of a rate cut in May has gone from around 50% to near enough 100%. So what we're saying is we're not looking likely, unless the stock market just keeps tumbling 5% to 10% a day for the next few days, then things could change and then everything is off the table. But if it slows down and the decrease in the market doesn't pick up any more momentum, then you could just see the Bank of England and the Federal Reserve sitting on their hands until the next meeting in May. And at that point, we're looking like both of them will cut. Now, what could happen there is that we'll get a 0.5% cut rather than a 0.25% cut, which we'd had. They might go a little bit harder, even with the risk of this rising inflation. So the Federal Reserve, they were saying on Friday when talking to journalists, it's too soon to act on this. And that's something that they just want to see how this all plays out. And the reason for that is that, let's just say, for example, Keir Starmer put tariffs on something. He would likely see how it plays out. Whether you like Keir Starmer or not, he would implement a policy and it would be there for at least a few months. He might reverse that at some point. The problem with Donald Trump is that he might reverse it by dinner time tonight. And that's the problem. So the Federal Reserve needs to leave this and see how it plays out. What about mortgage rates prior to the Bank of England meeting and the Federal Reserve? Well, the mortgage rates are based off something called a swap rate. And what has happened while these tariffs have been going crazy and causing stock markets to crash, the swap rate has dropped by nearly 0.5%. What that indicates is that likely this week we will see some lenders cutting rates. You see, HSBC, NatWest, Barclays, all of these banks, they borrow off the bigger banks like JP Morgan on the swap rate. So they can now get money 0.5% cheaper than they could last week. That means that they can give some good deals to stimulate the mortgage market when it has slowed down. So in theory, the tariff war is actually a good thing for people that want to get a better deal on the mortgage. And so it could end up working out very good for people that need to remortgage this summer. We'll keep an eye on that. Let me know in the comments. Once lenders start cutting rates, some of them are just waiting and seeing at the moment. While they can borrow money cheaper, their stock price is getting hammered. They want to see what happens with inflation. But I bet we'll see some mortgage rates go down in the next few days. And I'll let you know as soon as I've got information on that. Do make sure you like this video and subscribe to the channel. And check out all the other content as well on the channel, including this video right here.